Trading psychology. If you're new to trading, I want you to hear this clearly. Trading is not hard because you're not smart enough. It's hard because it forces you to face yourself. It tests your discipline, your patience, your emotional control. And most people are never trained for that. The first truth you must accept. The market owes you nothing. It doesn't care how many hours you studied. It doesn't care how badly you need money. It doesn't care that you lost yesterday. And the moment you believe the market owes you a win, you start making emotional decisions. You revenge trade. You over-risk. You refuse to accept losses. Professional traders understand something simple. Losses are not failure. Losses are the cost of doing business. Just like rent in a shop. Fuel for a taxi. Stock for a business. Once you accept losses emotionally, fear begins to disappear. Trading is a game of probabilities. Let me say this clearly. No trade is guaranteed. Even the best strategies in the world lose. Even professional traders have losing streaks. That's not a flaw. That's probability. If you expect certainty in a probabilistic environment, your brain will panic every time price moves against you. And panic destroys discipline. Professionals don't think in single trades. They think in series. One loss means nothing. One win means nothing. Only consistency over time matters. Your real enemy is not the market. The market is neutral. It's not hunting you. It's not targeting your stop. It's not personal. But your emotions will destroy you if you don't control them. Fear makes you exit too early. Greed makes you overtrade. Ego makes you refuse losses. Impatience makes you enter bad setups. Professional traders don't remove emotions. They design rules that protect them from emotions. That's why rules exist. Risk management is not about money. Most beginners think risk management is about protecting the account. It's not. It's about protecting your mind. When you risk too much, every candle feels personal. Every pullback feels like danger. And your brain goes into survival mode. When risk is small, losses feel manageable. Decisions stay logical. Discipline becomes possible. If one loss emotionally hurts you, you're risking too much. Professional trading is boring, and that's a good thing. If trading excites you, something is wrong. Professional trading is repetitive, structured, boring. And boredom is a sign of discipline. Excitement creates mistakes. Calm creates consistency. Professionals wait. Beginners chase. The market rewards patience because real moves take time. Overtrading is an addiction. Many traders don't trade opportunities. They trade emotions. They want action, validation, dopamine. And that turns trading into gambling. Professionals trade less. Because fewer trades mean higher quality decisions. If you feel the urge to trade constantly, the issue is psychology, not strategy. Losses are your greatest teachers. Wins feel good, but they teach very little. Losses show you where you broke rules, where emotions took over, where discipline failed. Professionals study losses because growth lives in discomfort. Confidence comes from process, not profit. If your confidence depends on money, it will collapse after one loss. Professional confidence comes from execution. From knowing, I followed my rules. I did my job. I accepted the outcome. That kind of confidence cannot be shaken. Patience is a competitive advantage. Most traders lose because they cannot wait. They enter early. They chase moves. They force trades. Institutions move slowly. Liquidity builds in stages. Structure takes time. Patience is not weakness. It's controlled aggression at the right moment. Survival comes before success. Your first goal in trading is not to make money. It's to stay alive. If you survive long enough, skill grows. Discipline strengthens. Consistency appears. Most traders fail because they rush profits instead of building longevity. Final message. A professional trader is not someone who never loses. A professional trader accepts losses calmly, follows rules consistently, controls risk obsessively, thinks in probabilities, manages emotions intentionally. Trading is not about being right. It's about staying disciplined when you're wrong. The market is a mirror. It reflects your patience, your discipline, your emotional control. If you work on yourself, trading rewards you. If you fight yourself, trading exposes you. That is not a warning. That is an opportunity.